welcome to this episode of Live with Lizzie Lee, powered by the China Project. I'm your host, Lizzie. Joining me today is Ms. Diana Choyleva, Chief Economist of Inodo Economics. Thank you so much for joining me, Diana.
My pleasure.
So, Diana, I recently saw you had this comment that after Xi Jinping consolidated his power at the 20th Party Congress, he decided to take a gamble to, quote, bring China back in action by spring, unquote. I wonder if you can help me understand that quote a little more. What kind of policy pivot do you expect early this year?
Well, what she did was a 180-degree turn with respect to zero COVID. That has been a huge change. And this statement that you quoted was meant to say that he achieved everything he wanted. Consolidated power, has the Politburo made up of his men. So he felt politically secure to make such a substantial U-turn, because China's chosen policy, while it appeared originally successful, certainly had put a huge toll on the economy, which culminated with those unprecedented widespread protests in November, which the Communist Party will never admit it, but was certainly a factor in pushing the leadership to change tack. Originally, the problem was that this early success with the zero COVID strategy and Xi attaching his name to this policy made it almost impossible for him to change, because it would have been a huge loss of face. But progressively, as we had much more also virulent viruses, COVID-19 mutated into Omicron, which was impossible to contain. And the authorities in China were already struggling significantly with that strategy. So that was a significant change, which also, though, was accompanied by a few other changes. China is desperately trying now to portray that it's open for business as usual and attract foreign investors, both FDI and portfolio investors, as well as they declared that their crackdown on the technology giants and the internet platform companies was brought to an end, which was also aimed at instilling more confidence in the Chinese economy.
So, we usually think of Xi Jinping as a hardline statist, constantly tightening his grip on ideology, clamping down on the private sector, et cetera, et cetera. But recently, we seem to be seeing some softening on the margin. We saw this credit support to the property market. We saw the removal of Zhao Lijian, one of the most notorious wolf warriors at the Ministry of Foreign Affairs. These moves all seem to be a little uncharacteristic of Xi Jinping. Are we reading too much into these changes? Do you think Xi Jinping actually changed, or are we just projecting?
My assessment is that this is a tactical retreat, which tells us that the economy was in a really bad shape. Also, by being so closed off, China was losing out geopolitically with respect to the US in terms of pushing forward with its strategic objectives. So, from that perspective, the market has certainly felt a huge relief by this change of heart. It is too early to claim that this is a fundamental change of direction. There's loads of other indications going on that suggest that she's focused on national security first and foremost, and putting economic development secondary over the long term has not changed. But China, and the Communist Party in particular, has a number of times in the past been on the brink of collapse, and they have been remarkably successful at managing to pull off from that brink. And to my mind, this was one such example of pragmatism. But has it really changed the fundamental direction of travel? I don't think so.
I see. So still too early to tell. Let's just be cautious here. You've been talking about this idea of great decoupling. You don't mean complete severance of relationship between the United States and China, but I wonder if you can talk a little more about the idea. What sectors are likely to be hit the hardest by the geopolitical headwinds? And how is China likely to react to its deterioration of external environment?
The great decoupling has been our key investment thesis over the last few years here at Inodo Economics. The idea that the world is bifurcating into an American and a Chinese sphere of influence. And there is an all-encompassing geopolitical clash and contest for, or if you like, great power competition between the existing hegemon and the aspiring hegemon. And above all, this really is a clash also of ideologies, two very different perceptions of how the economy and politics should be run. When China joined the World Trade Organization, it was welcomed into an international order that was largely set according to the free liberal market economic rules. And China has, first of all, not converged towards these rules at the speed that it was originally kind of part of the agreement of the WTO, but it certainly stated now that it does want to pursue its own model that is not according to those rules. Mm-hmm. So this bifurcation of the world, of this very globalized world that we were used to, has had a multitude of, I'd say, pervasive consequences. If you look at the economy as a whole, first of all, this type of regionalization, or however you may want to whatever term you want to use, has lowered global productivity growth. You know, when you are doubling up supply chains, rerouting, introducing a lot more redundancy in order to create resilience and not be dependent, especially in the world of today, which the way technology has developed has made pretty much every sector in the economy, it has turned it potentially into a weapon. Of course, more sectors have more direct national security implications. Take, for example, semiconductors. And this was, when we came up with, we came up with the phrase, the great decoupling. I learned a while back when I got the global financial crisis right, that it's not enough to get things right. You also have to get the PR and the wording right. So I mulled over this, and we even bought the domain name, thegreatdecoupling.com. But at that time, when we were developing these theses, we split it into a trade war, tech war, and Taiwan war as the two aspects, as the three aspects broadly of this. And certainly the tech one has been unfolding. And of course, the trade war, the naming came from Trump's action. But it's important, because you asked how China will react, it's important to realize here that this decoupling is the strategy that China has pursued as well. Because China is only open to the rest of the world as long as it suits its own needs. And it itself has been pursuing a strategy of Fortress China, moving up the value-added chain, creating a self-sufficient economy within its geopolitical sphere of influence. It realizes that geographically it's constrained, it would need to have a geopolitical sphere of influence. But ultimately, it's this autarkic model that China has in mind. Mm-hmm. It is not something that is a result necessarily of US actions. Mm-hmm. In fact, you could argue that the US was late in the game, waking up to the challenges that China's mode of development posed.
Fantastic. There's a lot of excitement in the market right now about China's growth prospect this year, pent-up demand, et cetera, et cetera. But do you see risks associated with China's economic recovery this year? And what are your suggestions to investors who are focusing on the Chinese market?
The most immediate risk is that ultimately removing so abruptly zero COVID Before the protests, the authorities had started to gradually, but very marginally relaxed conditions. This kind of very sharp ripping off the band-aid comes with the risk of an uncontrolled spread, putting much bigger strain on the health system and society than the authorities obviously are hoping for in the best case scenario. Now, we are on the cusp of the Chinese New Year. It's a super spreader event like no other. I mean, certainly the message that the Beijing has sort of spread in every local government is now falling over itself to publish figures that in urban areas the pandemic spread is at its peak. But of course, we now have the rural spread as the second wave, and these are more vulnerable people, much less access to proper medical care, less educated, etc., etc. So there is a very immediate risk of this strategy veering towards what could turn out to be a significant shock. But on balance, our assessment is that actually they'll manage to ride this wave. And then the authorities are throwing everything and the kitchen sink at trying to get the economy going. And in particular, the small, medium and medium private enterprises, as well as the young graduates, where unemployment rates of those between the ages of 16 and 25 have been extremely high, and certainly a big worry for the authorities in Beijing. So my expectation is that once we see what happens during the Lunar New Year holiday period and how China manages to ride out that wave, because the best hope for that Beijing must see is that this sort of washes through the population, which, it's a much less deadly virus. They have some level, of basic vaccine protection, that it turns up to be like a very large flu epidemic. Now, of course, I say this very carefully. In the past, the Chinese Communist Party has formed on actually inflicting millions of deaths. Take the Great Leap Forward, for example, where estimates suggest that in the mid-30s, million people died. In that sense, it's unlikely that we'll see this level of deaths, both in terms of absolute numbers, but also as a proportion of the population, to have that significant impact. And it's quite cynical, if you'd like, or heartless to say, but why this switch is positive in terms of the immediate future of China is that the lockdown measures impacted absolutely everyone, and as such were a very rare unifying force that was disliked, and we had the protests. Now the deaths will impact only a share of the population, and as such carry much less risk politically for the party. Mm-hmm. The problem is that they are yet again throwing money at the economy along the lines of the old growth model, credit-fueled, pump priming, structural changes, but not fundamental changes that would actually result in the much necessary rebalancing of the economy towards consumer spending. Here we remain, or we are probably off consensus. I mean, the moment the consensus in markets is that, this is good news. And it is good news cyclically. They'll probably manage to get good growth rates towards the second half of this year, but highly unlikely to be able to get the consumer to be a genuine growth engine going forward. Mm-hmm. Also, if you're a long-term investor, don't underestimate the great decoupling. And actually the fact that from a US perspective, outside of the tech sector, one of the other areas is to consider how they protect themselves from the point of view of capital movement and capital controls, and how much Western or US capital they're willing to allow, to enable what they consider to be a hostile regime. So long term, the story hasn't really changed much. But short term, there is optimism that can be played in markets along the lines of the old growth model, not on the basis of a resurgence or arrival, the final arrival, because we've been waiting for this Chinese consumer forever.